All right, what's going on, ladies and gentlemen? Welcome to November 4th, 2019. So the market is becoming really interesting. We're starting to get a lot more clarity in what's kind of going on. Everything is starting to make a little bit more sense, at least to me, and that is what I'm going to cover today. So, firstly, let's get into what happened today. So I'm going to go ahead and show you guys this document right here. So all right, so here's my thinking. So first of all, two important things happened today. First of all, the factory order reports was released today at 10 a.m. Eastern time. So for me, it's 9 p.m. actually, or 9 a.m. And then the TD Investors Movement Index was also released. So what the two reports here, first of all, since this was released at exactly 10 a.m., we're gonna see it, and it's gonna show up on at 9 a.m. for me. So I'll show you guys this right now. So I mean, this is Amazon, but you can see it because it followed the market more or less the same way. Amazon was sitting at around 1809, and as soon as the report came out, it came down to about 1803. And this was obviously an intraday, a very good intraday play if you decided to take one. If we look at the SPY, you can actually see the movement on the indices. So right here, as nine starts kicking in, we start getting a drop for about 3 minutes, and then we get a full recovery for the most part. But we do start a downward trend for that day. So that is not the greatest news, but we did start up downwards come open. And another thing that's important to watch is, so you saw that, and now if you look at Amazon did not start the same way. Amazon did not start that way. It started up. So there are certain stocks that are actually starting to diverge, and I do like that a lot. If you can look at, I'll show you right here on this screen. Right here. So if you look at Amazon right here on the daily chart, you're starting to get some building volume, and I do like the way this is looking, in my opinion at least. We're getting this earnings report trying to start kicking in the upward direction. It seems to be hitting this level very much. There are two call-outs that we made before the market had opened. Actually yesterday, I don't think we included them in these videos, but basically one thing that we said was Amazon was probably going to break 1800. I wrote it down in a group chat somewhere, and additionally, there's a second part to this, which I said that BA, and this was prior to market open, was going to really take off as of today. And the reason I actually thought that, so I'm going to get into that over here. Let me go to this side. So the reason that I thought this was that BA has been stuck in this range for some time over the course of, I'll tell you actually how long. So 9 days. That doesn't seem right. Actually, maybe. Whatever the case is, it has been kind of stuck in this little ranging area, and the way that we've been seeing it, the reason we've been watching it this way is because we had a 350 put spread. So as long as it hit in 350, we would have made about $300 on that. Unfortunately, last week it did not hit. There was a point where we could have taken out on it once it broke into the 351 range, and that was a perfect place to sell. We didn't unfortunately do it at that time because we were occupied, whatever the case was, and it didn't happen. However, once we saw how this level, the 345, has been acting very interesting. So when we saw it approach it around pre-market, and it's like, oh yeah, this is definitely going to run up today, and it really did run up. It ran up about 1.71%, and that's really great. 1.71. It showed up a little different. Actually, from close of yesterday, it did run up about 1.71%. So that was a pretty good move. The options ended up moving nearly 100%, and that would have been just a great day hold. And now I am a little bit more bullish on this stock. I think it is possible that we'll come back down to 350 as it tries to consolidate above this above this range actually. We will have to see how that goes, but so that's my thinking as far as BA goes. I do want to end up probably selling some credit spreads on it around 352. So after it comes back, I'll probably end up taking something along those lines. So we'll obviously see how that goes, and and that's BA. So let's look at AMTD. This thing overloads. Let me try it. So let me go through some of the other plays as well. So if we go back to my report, so we have this. So the investor movement. So so you saw that it came down. So the reports actually showed, I believe, was that, so you can actually check on this. So I'll show you, but it did come out that I believe that there was a decrease. There was a decrease in orders. So you can see it here by 0.6%. That was a drop for us. And then as far as the investor movement report, we saw that it did actually increase the amount of exposure that investors were taking into the market. Buying equities was higher from the last one. So that's how TD. This is just something to beat TD reports to see how much people are investing around that time. So we're steering a higher amount of investment around this time. Now, that is just that. That's kind of interesting to know as far as market sentiment, what's going on, that kind of stuff. So and now I want to show you guys AMTD. So let me come over here. All right. So AMTD is actually TD Ameritrade. Now this is actually probably one of the easiest plays ever. So what ended up happening was what is it? September 30th can actually be seen as a fairly notable day for a lot of different investment companies or brokerages actually. Like this is around the time where I think this is the day that Charles Schwab had decided that they were going to be doing no commission trading, and now this is the day that TD Ameritrade had decided to follow suit as well. And, we had completely come down and then fully kind of recovered at least this part. And now this is just a massive gap fill that, will probably need to be filled. Now, the beauty of actually this stock is that it's been running actually fairly well over these last few days, just intraday, not even from this gap. So we have this gap, obviously, that went from here to here. So we moved almost a little bit more than 2%. But today we moved 1.65%. And the percent exact isn't really that important. What the point is that we are starting to move up. It's trying to fill this gap here. Now, my goal, and what I want to show you here is, let me show you the other chart. So, it moved about 1.6% here, and then another 6%, 1.6% here, if I can get this thing to click. All right, there we go. So 1.7%, and then, after we kind of bottomed out here. Now, this is really good because we're starting to see some strong movement above we don't have VWAPs here, but above these EMAs, and then we're approaching this SMA. So that's really good as far as technicals go. Fundamentally, they're obviously not going to be doing worse. These commissions actually make a very small portion of what is actually their revenue. The revenue mostly comes from other things. So it's like 3%, if I remember correctly. It's very small. I mean, it's a lot of money. It's like billions, but it's not. It's relatively very small, and it's something they can make up with by adding more services, and that's a lot of the consideration between the exchanges of brokerages and things like that. So yeah, that is what it is. But I do like the way that this is moving. This trend has been really good over the last few days. It's been almost 3% over the last 2 days. Yeah, and so it is actually, I do like this trend quite a bit. And what I wanted to do, and this is the cool part, is that TD has some very strong spreads on their options chain. So what that actually means is we can go ahead and take a look into, for example, if we looked in this week, you can take a look at this. You can see that once we start hitting closer in the money, so it's at 40 right now. So this one is about to hit in the money, and 40 is obviously a psychological level as well. As they start breaking into that, you start seeing that the value goes up quite drastically, right? So obviously for this to work, you're going to have to move about $1 to $2. So we have to expect another 1% move out of this. Is it probably going to take a break come tomorrow? It possibly, very, very likely actually, that we're going to get some pullback, and then we're going to start seeing it take off. But here, let me show you the spread, the chain. So here, for example, we have at 39, which is where the stock is above right now, at 115, and then this one at the 40, which it's about to hit, is 55 cents. Now, the spread between these two is upwards of 50. It's almost 60. I think it's almost 60. Yeah, it's about 60, 70. Why can't I do basic math? Sorry about that. But if you look at these other calls, for example, we can take 2 strikes out, so you have to pay attention to that as well. So the strike difference here, for example, this is 39 and this is 40. So this is a $1 strike difference. So we will have to watch the same thing. I can't buy the $41.50 and the 42 and expect similar results. It doesn't work that way. So I would need to purchase the 41.50 and I would have to purchase the 42.50. That would give me a $1 spread, and that would mean, if, for example, we can get $41.50, so we'd have to see her come around here to this area. If we see this, we would get a maximum potential. We wouldn't get the maximum, but that would be the best area to own that spread. Because as spreads work, as far as spreads are concerned, you make money off the difference between them. And that's exactly what we want. So for example, if I were to purchase the 10 cent, if I were to purchase this 10 cent one, and then I were to sell, and this I don't know if this pricing is correct. The bid is a little funky. I don't know how many people actually trade these TDs, but either way, that would actually be a concern as you start looking into this, is the volume, right? Because if you look at this, we're only getting about 100, the thousands for the in the monies, but that's it. If you go really deep in the money, it's 0. If you go out of the money, it's 0. So all of the volume exists here, and that's actually what causes these types of spreads. So, but if it can actually start pulling in the right amount of movement, then you can start seeing, for example, the spread here is, let's say, 60, right? It is 60. And the spread between these two, if we were to price this in, I would say when we were looking at it on a different chart, we saw that this one was priced in at around 8 cents and this one was priced in around 10. So the difference was about $2 to $3 or 2 to 3 cents, and then consequently $2 to $3 because you're buying hundreds of contracts. So what you could do is, if you were to purchase these and then it did end up hitting, and obviously you need to get volume. If it doesn't hit, then you're going to lose that amount of money that you put in, but you will be able to sell it once it gets in the money. Now, and that's the beauty of this, is I think that if you were to take, for example, the 42s, if you were to buy the 42s and then sell not the 42s. If you were to buy the 41.5s and sell the 42.5s, and assuming that you actually have to pay some sort of spread on that, what you could do once it hits is, let's say you buy 5 of them, okay? So to buy 5 of them, they would cost you about $3, and it costs you maybe $3 per each one. If you buy at that point you'd own 5 of them, and if it hits in the money and the spread gets near to what this is, so let's say we hit nearly a $60 spread. So let's say we get a $60 spread or a $50 spread. So you get 5. So you own 5 of them, and it'll have a spread of 50. That would end up becoming about $250 that you make from it. And that net change is what you're getting from investing about $15 to start. So that's the thinking here, is these are the types of plays that I'm really liking, especially in this type of market where we're getting some much more drastic movements. So what we want to see is that this stock hits right around here. And if it can hit here, if it can hit at this area, then this is where we're going to start seeing our profits come in. Well, we're going to see quite a bit. Even if it heads towards it, it does not need to be in the money. But we're not going to get volume until it does hit in the money. And that's the concern with TD Ameritrade, with this option chain. So you have to pay attention to, obviously, the option volume, blah, 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 things like that. But as far as all things considered, with that, it is actually a very interesting play, and I do like it. I'm probably not going to put very much into it. At most, I'll put in maybe 100. And then we'll see, because that is actually similar, and I think I said that in my little notes here. This could become similar to the Amazon spread that we were in earlier when Amazon had their earnings, and if you were to play that much bigger, you could get maybe 2,500% out of it, and that's multiplying your account or whatever amount that you put in by 25, and that's not a bad break right there. So definitely that is something to keep an eye out on. I'm going to decide how I'm going to be playing this. I need to know if this volume will build, and I need to even know, because once you're in, you're stuck in it until it can hit. So if it doesn't hit, you're going to lose everything they got into it for the most part. Like, the odds of you being able to sell it at any level of profit is so unlikely that that is the risk with plays like this, is you do need to be right. So hopefully we'll be right. What we'll do is we'll get some time on it too. So instead of buying just the straight November 8s, we might buy 1 week out where the probability is much higher, and we do see quite a bit more volume. Now there is a caveat, and the caveat to this is that so the 41.5s here cost 30. The 42s, we can't get them because they don't even exist. And so let me see, 30, and then these ones cost 42.5 don't exist. So we'd have to go a little bit further into the 43s, and you'd see that it costs 10. So it's going to cost you 20 per each one in there. But if it can hit, then it hits, and you can actually make a reasonable amount of return anyway. Because if you look at the spreads here, it's actually it's similar, but it's not close. It's 40 this time, where you're paying only, whereas here you're only getting about you're paying 10, maybe 20, you're paying 20 probably, and you're getting 40, that's still a 100% move, and that's really solid. So if you want to try to take in things like that, that's definitely something, those are good plays. Those are very good plays if you can get those right. So that's one. And then the other one, obviously, I was saying earlier in some of my earlier videos, is about watching the TLT. So, and here's my thing if you want to look at it. So watching the TLT. So now the TLT is getting to a very interesting place because we're getting all this information about the bond rates, the interest rate, things like that. And today we actually saw a huge dip off, and that is, and if you watch this intraday chart or this daily chart, you can see this kind of jumping around. This is very peculiar behavior, but it's not peculiar for the TLT really. But the TLT, man, these things make money. If you look at these spreads on the TLT, if you get something that's far out and you got some time on it, if you get some time on these types of positions, you can seriously make a lot more on them. And I really do like these plays. So, 143, I mean, the odds of it hitting 143 in December are very likely, assuming the news starts to follow in that direction. And that's what I'm hoping for, is that the TLT will start really moving big as this news cycle starts coming around in the way that it does. We're in Q4, so we got quite a bit of news to report on, and there's still earnings. There's plenty of earnings coming up, actually. It's not as much as before. The majority of them have reported, but we still have some. So, keeping an eye on those types of things is I think beneficial as far as understanding where we are as far as the market goes. So I'll cut into that actually a little bit. So right now the bond rates they're not okay. So obviously we're not near inversion. We're unchanged on the 5-year. We have 1.59 at the 2-year and 1.79 on the 10-year, and that's fine. We are actually quite a bit away, so we're not really concerned about some sort of inversion. But this is important because as these bond rates, these treasury rates start to go up, that's where the TLT should be reacting. So we should start seeing that on this TLT that the bonds will start coming up, and and this will act appropriately, and that's what we want to keep an eye out on. Additionally, another thing we want to watch out for is the yuan. As the yuan starts to come down, we have been seeing a run-up in our economy. Not our economy per se, but we've been seeing a run-up in the indices. So, for example, I tend to use SPY. There are other stocks that you can look at. I don't really care. I prefer the SPY and the Dow Jones Industrial because, I don't know, they cover the stocks that I think are important. So, for example, actually today we hit an exact high of 308. So this is the highest the SPY has ever been. And the yuan has been coming down continuously over the course of this week. And so we are seeing some great movement. And this is where I'll start injecting some of my own personal opinions. The very nature of the fact that we have been growing this way, and I felt for quite a bit now actually that it was a little bit artificial for some time now. This can be problematic. However, it also assumes to be not so. It actually is working out fairly positively. We're getting some more larger increases, and so let me take a look at the 2-year. So if we get a little bit more vision on this, so the last December when we saw this rundown over here, so that's something I feel like is potentially coming up for. Someone was saying that the market's going to actually keep climbing all the way up because it's like a cup and handle. I don't really know about that. I don't really even like that. First of all, it does not look like a cup and handle at all if you really think of it. But I do think that we're probably in for some type of news that will probably be very important as far as driving us up or down. The catalyst, for example, the currency agreements, things like that. There is quite a bit of news going on, and then on top of that, there's still the impeachment trials that are going on. There's more information coming out. Something about the House Democrats are pushing on towards the impeachment, so that's going to obviously affect the market in a negative way, most likely. That's how it's been up until this point. That's how I believe it will continue. On top of that, so as we've started to kind of run up with this, I do believe, though, however, the fact that we have cut rates 3 times, the fact that we've done that 3 times in a row. The rate cut chance is pretty low right now. It actually did go down, which is not surprising. I was waiting for this I was watching this in real time during the release of information by the reports about the factory orders. So I did expect this to go down after I found that out. It did not go down immediately, but it is going down now. So we may actually see the conversion from 150 or 1.5 to 1.75 as the rates to 1.25 to 150. So that's going to be interesting. We might see another quarter cut coming. Who knows? I mean, ultimately, that is what we're waiting on now to see what the Fed will decide to do in December. This is actually something that people are anticipating quite high as well. So we'll see. Like I said, all this is news. I'm assuming that if they cut it again, we're probably going to get a pretty big rundown. And when that comes, that'll be really interesting. But my opinion, obviously, is what matters because I'm doing this once again for my own personal benefit. I do think that Amazon is probably going to start running up quite a bit soon. I think because of the very nature of the fact that it has diverged for so long from the rest of the market. For example, Apple literally destroying its all-time highs. It's up so much in the last, Lord, I mean, this is honestly, to me, it's a little too much. I mean, if you look at it, we hit 235, which is actually ironically where Montesquieu or someone took their positions. They bought like a put spread or whatever. But so if I look at actually how much it's changed since then, yeah, it's moved like 10%, which is a lot, and this has been a very good trend. And this is also what we've been seeing with these indices is that we'll go up. We'll go up and take a break. We'll go up and take a break. So we are seeing there's a little bit of breaking back and forth. This gap up was really crazy. But yeah, I do think that we're going to see a little bit more running. We're probably going to see a pullback as of tomorrow. We'll have to honestly just wait and see. But I mean, a lot of this is waiting and seeing and kind of taking place. For example, Cat's just taking off after these earnings. These earnings just are really, really pumping this market right now. And ultimately, that's what we were waiting for, is to see how does the market react to all this news. So you can't even see Cat, but here we are. So how the market is interpreting these earnings is fairly solid. So we are seeing quite a bit of growth. We're seeing this in BA as well. BA, despite all of the news that's been coming out, I think it's possible that we can actually start seeing a serious run up with BA. So we'll probably take that as well. Qualcomm had earnings very recently, so they're also taking a run up. Like I said, I mean, just if you look at all these, they're all starting to kind of push up quite a bit. So that is my opinion, is obviously don't fight the market. If it's moving up, then go up. That's it. Intel literally destroyed earnings and then kind of kept going as well. Which is actually watch, if you keep an eye on this. Nope, she's done. So okay, what I was waiting on for a while now is Intel to do a gap fill. This gap fill, which it is already done, so there's no point in talking about it. But it's there. So this is one of those really interesting plays. Also, I wanted to take a look at this stock. Some of these stocks I'm looking at, kind of for the first time as I talk about it right now. This stock. So this stock tanked so hard over for its last earnings. It tanked where? Good Lord. 30%? That's insane. So it tanked like 30%, and then from there, over the last 2 days, it has recovered. Wow, 10%? This thing is a mover. Okay, well, yeah, okay, so keep an eye on this stock for sure. This stock, I know, has made quite a bit of money. Apparently, there's a massive group of people, and they all collectively kind of put in, I think, $3K into it, and as a result had made $380,000 or something like that. So that is the move of the year. So we're gonna have to wait till next year to get our own. But yeah, this was insane. This was crazy. I think play the continuation, like I said before. These are all these are playing earnings, and now they're continuing. So watch for that. Just play those accordingly, and I think it's a pretty good spot to be in. So we'll do that. We'll start setting up spreads against certain positions. Right now, Theta, I think, is pretty strongly in our favor as far as options are concerned. Theta is the decay, if you don't know. So yeah, it is working fairly strongly in our favor. So that is something I do want to hit on. And so BA is also another play that I'll probably end up taking at some point. And yeah, I think what I'll do in my next video is if I take any plays tomorrow is I'll write down all the plays that I have taken, and that'll be information that is out there. So yeah, and I think that's all I really have to cover today. Bond rates, Chinese yuan, we've already seen all this. So yeah, that's it. Thanks for watching. If you watched, if you didn't, then thank you anyway. I don't know. Yeah, it's been real.